Yes, I am recording this, Nasir. This is recorded, and it is the 2 o'clock lesson on chart patterns and how to play them on day number 5 in the DPL open house. Coming down the home stretch. I hope you guys have had a good time this week. It's been pretty fun despite the market doing what it's doing, but I really enjoyed getting to meet all of you that are in here and share some of my knowledge here with you, and hopefully for those of you who've signed up, well, obviously for those of you who signed up, we get to continue this journey together as we go, and I'm pretty excited about that. So this is a lesson on chart patterns and how to play them. So let's go over a couple of chart patterns that should be somewhat recognizable or easily recognizable, and we can try and call them out, right? Can anybody tell me what this chart pattern is called? For some DPL bucks, what is this chart pattern called? Good. There's a lot of names for these, right? Yep, I think Nina got the one I was looking for, right? Kind of that ascending triangle, ascending wedge, right? Okay, let's look at another one. What would we call this one? Right? This is going to be the same idea, descending triangle, descending wedge, right? And so what about this one? Bottom left, what would we call that one? Head and shoulders. That's right. We've even talked about that in the room today. And then if we invert that, obviously it looks the same going the other way. That's an inverted head and shoulders. And can anybody tell me, when we have these patterns setting up, can you see my cursor when I move it around? You can't, can you? Oh, that's too bad. When we have these patterns setting up, what are they doing? What is each one of these patterns doing? What's happening? We're not trending. Compressing, consolidating. Yeah, correct. Good. So these are all consolidation patterns or bottoming patterns or topping patterns setting up to move in another direction. Okay? And so what typically starts to happen in these patterns? What do we get that in this room we look for during a consolidation? Yep, Jonathan with the DPL bucks. We get a squeeze many times within these patterns. And so being able to recognize these patterns, and there's a ton more, right? But being able to recognize these patterns will help you find these TPS trades. So what do we have here? Right? These are pretty easy because it's just sort of, it just shows you the this is a double bottom or a W, right? If you need sound, turn on sound way over here. Lori, a winner? uh, yeah, this is a double bottom or a W. We can do the same thing in the reverse, right? We have a double top or an M, right? An M pattern, right? Which is a bearish pattern. And then our absolute favorite in this DPL room for TPS style trades, what do we call this one? Right here in the middle. Yeah. Pennant, bull pennant. Yeah, it can be a woodpecker. Generally, Nate likes the top of the resistance level to be a little flatter after the spike up. Not quite an ascending triangle, but this is our bread and butter right here. This bull flag pennant. This is what we look at, and this is what we look for. And these are the types of patterns that jump out as we're scrolling through. They just, as you've heard the phrase, they hit you in the face, right? And when that happens, you go, okay, I need to pay attention to this pattern. There's something happening that I can set up a trade on, that I can set up a play on, right? So how do we play these patterns? Like when we notice the pattern and we're getting ready to play them, how do we play the breakout, right? Obviously we want to get in on the squeeze, but how do these breakouts work, and how do we know when there is a confirmed breakout? So let's look at the ascending triangle, okay? Which way does the ascending triangle typically break? For more DPL bucks. Right, Andrew, great job. This pattern typically breaks up, okay? As we're getting lower or higher lows and double tops, right? You can even look at this pattern, and it's a M pattern, right? And we have our double top, and then we come back down into support, and then we break up through, right? When we're talking about breakouts, though, we've talked about this in the room, right? Cost is in this pattern. Okay, yeah, we're gonna do that right as soon as I'm done with this this presentation. We're gonna go into the real world and try and find some of these patterns, right, into our charts. So when we're looking at a breakout, and we're going to use the ascending triangle breakout as our example here, when we move above this resistance level, the green line at the top, and you can't see my cursor, unfortunately, because of the way I have this set up, but this green line, when we move up above, does anybody know what we need to see on our chart to confirm that breakout? Can you even tell me what we want to see? Chuck, bang, DPL bucks for Chuck, right? I like that rhymes. DPL bucks for Chuck. We want to see the breakout out of this pattern on volume, right? And the breakout out of a head and shoulders or an inverted head and shoulders, we want to see that breakout happen on volume. And so that's why on the lower part of our charts, we don't track volume quite as much, but when we're breaking out of a pattern, that helps tell us that the move is potentially more confirmed, right? And then also we're going to see our squeeze fire in the direction that we are hoping it fires, okay? So how do we know a strong breakout versus a weak breakout? Right? What are our confirmation signals? So we just talked about the confirmation signal of a strong breakout being high volume on that candle that is breaking out. Okay? What if we get very low volume on a breakout? That could be a false breakout. We want to see this push up and through, and we want to see that on high volume. There's a lot of stops being run, and there's a lot of scalping buying coming through, which is going to show us high volume versus weak volume, which means the market makers have pushed it through and there's no buying to support it. Right? Sorry, my chat wasn't scrolling there for a minute. Let me try and catch up. If you're still having volume issues, click down here. Nelson, that's a great question. You're asking in what time frame should we see these patterns? All time frames, right? Whatever time frame you're playing, John said, right? That's a correct answer. You can see these patterns on a 1 minute. You can see them on a 5 minute. You can see them on a 30 minute. You can see them on a daily. You can see them on a weekly, right? They all work, right? And the move is usually greater the larger time frame that you're playing. Okay? So when we have a weak breakout, now let's look at what that might look like. Strong breakout versus a weak breakout, right? Now we're looking at that same or similar candle or similar pattern with candles. And so if you look at the green candle that is breaking out, we have high volume in our volume bar down below. We have the candle has pushed up and through and closed near the highs. This, to me, represents a high volume confirmed breakout, right? The market makers pushed it up through. We ran stops, and then people were also buying the breakout, which meant this is a confirmed breakout, right? And then we've got a little doji candle forming on the next candle, means, okay, now we're doing a little consolidation after that breakout, and we're likely going to continue this move, okay? But you can also have a weak breakout on high volume that's going to look like this, okay? This tells me that the market makers pushed it up, we ran some stops, and the shorts immediately stuffed it back down. Yeah, I am showing, you're right, Big T, I'm showing future volume bars ahead of price. And that's just because this is a graphic I was just creating to demonstrate what this looks like. I could have more candles on here, but it's easier for me to cut the candles off to just kind of demonstrate what the pattern is. But yes, that's pretty funny. There wouldn't be there if this was the last candle, there wouldn't be additional bars. I'm just trying to use a graphic to kind of show you what I'm talking about. Right? So you see this candle, we ran it up and then it got stuffed right back down. If I see this kind of a candle on a breakout, I am either going to stop out if I bought the breakout, or I'm going to try and roll this over and short it back down into that support line. Mark 70, that's not a stupid question. The market makers are both people and computers that control the price of any given stock. And they also are the ones that control, with every exchange, there's a buyer and a seller, right? And there has to be, a buyer has to put in at a certain cost and a seller has to put in at a different cost. And that's why we have spreads, right? Between the, like if you're trying to sell an option at 220, you're trying to buy an option at 225, somebody's trying to sell it at 245, the market maker is going to broker that sale, and they're going to take the gap in between. So that's how they make money. They're the middlemen, right? And they control price. So what you can see when we talk about, the OPEX week and how the price is moving up and it's moving down and it's really choppy and it's all over the place, that is from buying and selling, but it's also from the market makers moving it around and trying to suck premium out. If you look on the chart right now, that weak breakout, if our volume was low on this breakout, and I know you can't see my cursor, but I'm pointing at the candle with the high wick. If the volume was low on that, if these volume bars down below were relatively flat, and you had this high wick, that's basically the market makers pushing the price up through that level. One, to run some stops, right? To run some stops, and then two, to see if they can get buyers to come in. And then they run it up, and then they see that there's no buyers to support it, right? So the price runs up, there's no buyers to support it, and all of a sudden it comes right back down, okay? Because they're going to move the price in and out so that the market makers are scum. Somebody has to facilitate those price changes and broker those deals. But that's what happens is that price will move up. There won't be any volume. There won't be any buying to support it. And so it'll rip right back down and create that wick, because the market maker is going to find the supply and demand, right? Where's their demand and do they have supply, right? So if we go back, someone just asked the weak breakout or the strong breakout. If you look at this green candle here, the market makers pushed it up through, buyers came in, stop losses also got hit. And now, there's buying, and there's buying to support it. So price moves up to the high end of the candle and stays there, right? And so it's on high volume, right? Does that help answer that question? And we can get into the weeds even deeper next week if you're a member on market makers and how they work and what they do. There's some great books on that too, and it's pretty fascinating. And once you know what they're doing, it helps inform your trade, because they're the ones controlling the markets, right? Shall we again? What happens if a stock is stopped with options? Like if you have an options trade and it gets stopped. Oh, you want weak again? That would be weak. And I would actually even say this would have, the volume would be smaller. So if we did this, sorry, I'm just going to alter this presentation a little bit. I mean, this would be a true weak breakout, and then we could say this would be on low volume, right? Weak breakout, low volume, market maker ran it up and then stuffed it. Does that make sense? If I'm drawing a trend line, I'm generally drawing it to the top of the wick. And we can talk about how to read candles here in a second, because I actually have a little bit of extra time today. Unless Z-Man is back, he had to run out. So we can talk about how candles are formed as well. But when I'm looking at trend lines, I'm going to the bottom of the wick. Unless it's a breakdown and reclaim, then you'll see a wick that pushes through. Yes. In answer to Mike, I switched this one because you see I put a weak breakout on low volume. The previous slide was weak breakout on high volume. Yeah, and which means it just got stuffed down by sellers and shorters. That's correct. So when we're playing these patterns, and what if I miss the breakout or only just scalp the break? Can you still get in the trade? Can anybody answer that question? What would you use? And we've used this phrase in here quite a bit. What would you use if you missed the breakout of a pattern? What would you use to get in? Yes. SoCal Trader. Nice job. We're going to enter on the retest, right? And that's where the patience comes in. So if you've got your pattern drawn in, and usually there'll be a VP line as well. I don't know why I have these lines on here, but that'll actually be perfect, right? if there's a VP line there, you're going to see the breakout. It's going to break out of that pattern and it's going to retest. Right? So, you know, what does that look like on an inverted head and shoulders? You know, you can, whoops, sorry about that. If you're watching it form, you can enter on the green line on the right shoulder of this inverted head and shoulders. Right? But if it breaks the neckline, you're most likely going to get a retest, and that's where you want to enter. Right? Here's a breakdown on the descending triangle. Breaks down, retests that level, and then rolls over. So when you're playing these patterns, and even when you're playing a TPS pattern, you can get in on a retest if you feel like it's got the juice to go. So before we jump into our actual charts, does anybody have any questions about what we just went over? Linda, if you press that little volume thing under there, hopefully you can try that and hear me. You should be able to hear me once you do that. All right, Tab, let's ask your question. Somebody asked one too. The retest, is volume important? If you can confirm the breakout, right? If you can confirm the breakout here on high volume, then when this comes into retest, it should fade a little bit, hit that resistance level, and then go, and you should get another volume surge at that point. Whoops. Sorry about that. Let's get that out of here. Get out of there. And the wedge pattern is what we play all day, every day in here. And I'll show you when we move over to our charts. Reminiscence of a stock operator is a good one. I always forget how to spell that. Here, let me Google it. Not how to spell it, but... And then I'll show you another thing you can do, you know, understanding these chart patterns. I'm going to switch over to my regular charts here really quick so that we can talk regular chart patterns. All right, can everyone still hear me? Yeah, I know it's Nate B's favorite book. But what I'm going to do, Larry, is I'm going to put it in here like it was mine. Right? So, and if if you read this book, you'll then understand why Larry's name is Larry's name. Look, so this is my favorite book. I read it first. Nate Bear likes to claim he read it first. It's not true. But if you read this book, then you'll understand why Larry Livingston is Larry Livingston. Yeah, it's a good read. It's a good read. And in all honesty, if you didn't figure it out, that was Nate Bear's favorite book, and I read it after him because he recommended it. I cannot tell a lie. I just put it in here. It's a book rec. You can get that on Amazon. I mean, I could even type in the Amazon link, I guess. See if it comes up. There you go. Yeah, I'll put it in here in case anybody just wants to buy it. No, you didn't. Larry, you're also a liar. Your name is Pretend, and you're also a liar. And everybody knows it. And I'm going to tell everybody that will listen. Nothing about you is real. So that's a great book. And I know did D-Man put in the volume price analysis book? Did he give you that one? By Anna Cooling. It's a complete guide to volume price analysis. All right, this is also an amazing book. It reads like a textbook, but it's an amazing book. Yep. We're now starting a book club. Read these by next Friday and we will discuss. Let's look at so let's start looking at some charts. So which one you said cost is in a bull pennant? Is that correct? Oh, I put cost into my browser window. That's not going to work. On the what? On the daily? Oh, cost is just rolling. The volume indicator on the left side of my charts is called a visible range volume profile. And you can just type in VRVP if you have Trading View. If you have most other charting soft, wow, look at Costco, it's just dying. Most of the other charting software will just call it volume profile. This is volume by price. And if you look at that last book I just recommended that talk all about volume by price, down here is volume by time. But this is volume by price, and it gives you support and resistance levels. Which setup? Do you want this setup that you're looking at right now? T-Bird dude? T-Bird dude? Yeah, I can give you this one. This is a Trading View TPS setup chart. There you go. You can click that and put it on your charts. It should have everything you need. So did we have, let's see if I have it up here. How's LNG doing? Hanging on. Just hanging on. All right, let's see. Netflix. Did we have... We had a little breakout here. Yeah, see, we have a breakout. We had a breakout this morning on Netflix through the high, but it immediately got stuffed. So we could talk about that real quick. Let me see if I can get this a little bigger. Let me turn volume profile off for a second, and we can get even closer. So you see, this is our previous high on Netflix, right? We're gonna test it a couple of times here this morning, but you see this candle right here. This is what I'm talking about. This candle, let me draw it. So if we're looking to break out, right? This candle was trying to break out, and we were on high volume, but it immediately got stuffed back down. So if you're day trading this, See if I can see what that looks like on a 3. I mean, it shows up better on a 5, right? As that candle runs up and gets stuffed back down on high volume, that's an indicator that maybe it's time to look at this as a short or getting out of a long, because that breakout didn't happen, right? They're showing Amazon's showing 2 different authors for that book. I don't know. I'll have to look at that here in a second. Okay, and then as you can see, when that candle pushed up on high volume and was immediately stuffed down, what happened? Right? It was a false breakout. So we talked about that. That was a false breakout. This next candle is kind of deceiving because it looks like a false, like it's going to fake a breakdown too. And then we just rolled. And where did we roll to? From resistance down to what? No. POC is at a different spot. Support, yeah. Right down into support. And POC is the largest volume profile line right here. That's the point of control in the middle of this pattern. It's not always directly in the middle, but in this case, it's pretty close to the middle. And that's our point of control for this whole pattern. You see it there? You see, this is because this is visible range. We're now underneath the point of control, which means it's probably likely we're going to come down into the secondary point of control or all the way down into support again. And this pattern is not broken, by the way. Support's here, right? A breakdown of that level, the pattern would be broken. But it's just following the market today. If the market wasn't so crappy, I think Netflix would be out of here to the upside. I think it's just fighting, market headwinds. And I'll be watching this on Monday for a breakout, frankly, because I think we're kind of due for the market turnaround here on this dip. Mark, you want me to explain point of control? Sure. This is a volume profile node. This is where a lot of people are and are trading. And in fact, you could bring, this value area high to there. And the value area low is down here. And let me get rid of that line real quick. And then the point of control is the largest piece of volume at that price for this volume profile node, or this value area. So your value area low is going to act as support, and your value area high is going to act as resistance. And then your point of control is sort of an over-under line where as we push up through, we're going to come back and test it and bounce off of it if we're staying bullish, or roll down underneath it and retest it and stay below it if you're somewhat bearish within this pattern. Obviously, Netflix is not bearish. But if you're day trading within this pattern and it's below the point of control, right now it's bearish. Intraday, it's a little bearish. You could even look at that trend line break for a put down into here. But because we're talking about Netflix that is up, 60 some odd points on earnings, I don't know that I would want to be shorting this. But you see, when we're trying to identify trend lines and play them, that was a clear trend line that you could have drawn on your charts, and you could have taken a put or shorted the stock there for most likely a move down into the support level. Volume on the left is actual volume at price. Volume at price, which is way more helpful because it gives us support and resistance levels. Large chunks of people have been buying and selling in this area here, right? So we can clearly see there's a support level, which then when we look at the charts, we can see has acted as support. And there is a resistance level, which has acted as resistance multiple times in this chart. Because this is where the bulk of people are. Now, when we start to break out, if we break out, right, what happens? What's going to happen? Let's say the stock, curls here and breaks out here, hits this day high, comes back in and tests this, and then gets above that level right there on the red line. What happened? Is there a lot? What's going to happen here? There's a couple things that are going to happen. Yeah, resistance will become support. You're exactly right. High volume. Well, there's no volume up here, right? In terms of buyers and sellers. So buyers are going to step in on this break. Shorts are going to cover on this break, and shorts covering creates buying. So we move up, and there's just not a lot of volume for resistance to be put in, right? So we call that air. So there's a lot of air above that pattern. See, we look out over here, even when we come into this, Netflix demise, its slide, there's just not a lot of volume above here to create a resistance level until almost 415.98, right? Maybe there's a little bit in between at this other level, but there's a lot of air above it. So if we break out, Netflix is potentially a good breakout play, and that's what both Nate and D-Man have been playing this week, and trying to capture, right? Oh, great. Yeah, if there's a better price, Joe, that's awesome. Thank you for searching that out and putting it in here. Yeah, the actual name of this indicator on TradingView, only on TradingView, is VRVP, Visible Range Volume Profile. Just type in VRVP and it's right here. So Big T, in order to be accurate, wouldn't you have to assess the visible range volume profile when the analysis bar is on the last one on the screen? No, I think your question is, and sorry if I'm missing. Oh, I didn't want to do that. I wanted to do this. So in this case, yes, I want to see all of this. I want to see where everyone is, right? And I did this earlier. I would also come in here and put an anchored VWAP on there because I want to know, where the average price is for these last 2 days, where the average number of people are. And you'll see it usually lines up with your point of control. But if we're coming in here to let's look at a 15-minute chart on Costco, right? So let's say I'm looking for, I think Costco is going to continue falling, and I want to find out where I think it's going to bounce, okay? So what I can do is say, okay, on this larger time frame chart, there's a lot of stuff going on. I don't have to worry about these people up here, but I do need to look at all of these people right here, right? Because that's going to affect where a level is going to, act as support over here. So I'm going to draw a line right there because this is a value area low for this entire node right here. Just a massive chunk, right? But then I want to see how accurate that is. And then there's going to be another level. You can see it right there. There's a little point of control that sticks out right there. Okay. But now I want to look at these people by themselves to see, because those are the only people that are really going to affect the support for this. So this is called visible range volume profile because it's only going to show me volume profile for the range I'm looking at, which becomes really helpful, right? So then I have my two lines in here that I had drawn previously, but I can see a little bit better that for this area, I'm going to move that line down to here because that's my true point of control. And then this line I'm going to move up here because that's more of the value area high and low between that pattern and this pattern. And then this one's such a big VP level, I'm going to put a line there. And now when I come back out and I'm looking for support and resistance over here, right? I know we're coming into this point of control that I had just drawn. Or is that the value area high? Sorry. That might be the value area high. Where's my volume profile? There it is. So that's the value area low, right? For this pattern up here. So that could be a support level, but I'm guessing this will probably be more of a larger support level. So I'm going to come in here and I'm going to make it, a little darker. I've got these lines in here, so I know that I should be watching those levels, but I think we're definitely going to get at least a small bounce there. And if I'm just looking at here, right? If I'm just looking here, I don't see that. I don't see any of that because those people are way over here. Does that make sense? Sugar Doc anchored VWAP in Thinkorswim is borderline useless. They have it, but it's awful. They have it, but yeah, it's just awful. Henry, did you see how I just put anchored VWAP on there? Do you want me to show you again? Or did you get it when I just did it? Bruce D, the role of these volume profile lines, volume at price, is to help us understand where the most people are. Okay, so let's look. Another way this is helpful is to look, let's see here. Let's try and look at this range right here. I'm just trying to find a good example of how, no, that's not going to work. Let's see. The best way that you can kind of read really clearly read how it works. Basically so for instance, if let's say Costco bounces here, right? Let's say Costco bounces here. You see this? This is how I would read. This is a better way to describe this. So there is a chunk of people right here. Obviously, you can see all of that price action. Those are most likely people trying to bounce Costco, right, out of this oversold condition. Okay, we're consolidating. Maybe we're going to bounce, right? Can we all kind of agree and it's also it's a combination of things. It's people that are shorting, covering and taking profits, and it's also people trying to bounce, right? So if now it broke down, right? We can clearly see that it broke down. If we bounce from here, right? And we start like this level that I just drew on here, which it isn't holding at the moment. I think the level's down here. But if this holds, we're just going to pretend, right? And we start working our way back up here. How do we know, what do you think is going to happen when we get up level with this area here? So these people are represented by this volume at price node. Okay, does that make sense? So if I go to my point of control and I put myself a line there, and let's just make it yellow, let's make it 1. Oh no, I have to do it differently, sorry. So if I'm bouncing Costco, right, and price is starting to work its way back up this direction, okay, I'm bouncing, what's going to happen at this yellow line? Most likely, or around this yellow line. Yeah, it's going to act as resistance. And why? What's the psychology behind that? Why is it going to be resistance? This is where volume profile gets really powerful, by the way, too, because you're playing other people. Think about what other people are doing. And I don't want to give it to you now because I actually want you guys to think about this, because this is so powerful. People were trying to bounce it here, most likely. Okay? It broke down. Now it's bouncing. This is how we talked about this yesterday when I talked about psychology. Yes, Joe. Bingo. Joe gets 100 DPL bucks. People who were trying to bounce it here and didn't stop out, right? Most of the people are here at this yellow line. So they didn't stop out and they bounced it. Maybe they added down here. Who the hell knows, right? Maybe they added down here. Price works its way up here and they get here into the center of this massive group of people, buyers, potentially, right? And they get to break even. What do? Oh, thank God I'm break even. I was down, 30 grand on this trade or whatever, right? And I saved it. I'm break even. I'm getting out. Selling. Right? And I'm not saying it drops more than that, but that's going to act as a resistance spot. And being able to see that on the chart and understand that's where people are is really, really important. Just like if that then went, it's obviously going to reject off of there. It comes down into the value area low, which we've marked on our chart, and pushes up above to the value area high. Then it's going to retest. And if it's going to keep going, it's going to do that, right? And that's kind of your value area high level. So these levels, when they're on your chart, become what, if it was resistance, right? And we push through, then it becomes support unless it breaks through, right? And then it becomes resistance. So if you're above or below these lines, they are support and resistance lines. And some have larger weight than others. Right? Does that help explain that a little bit? I know my drawings here are pretty crude, but understanding when you're coming into those levels, what's been happening and the psychology of the people you're playing against. I mean, that's the market, right? The only way for you to make money is for somebody else to lose money. And whenever you lose money, somebody else is making money. It's a zero-sum game, right? So that's the power of that. Sorry, we got off chart patterns a little bit there, but does anybody have any chart pattern questions? I got to jump off here real quick. But, and then should be the three amigos on. I'm not sure if D-Man's back. So it might just be the two amigos. You want me to look at a daily SPY? Yeah, I don't want to look at a daily SPY because it's going to be gross. Whoops. type that into the wrong chat field. Okay. This is hilarious. They didn't listen to my my arrows. I mean, we're holding this 422.50 level. You know, and usually during OPEX week we'll come back, but this OPEX week we did not. But for the first, 3.5 days, we did what OPEX week is going to do. The issue is right there is Powell, and he kind of pooped the market for us, and issues in the Middle East and everything else. I mean, it's not just Powell, but there's just pressure on the market right now. Yeah. That trend, I got beat up. That trend up week that we had a couple months ago, that we're like, it's gonna roll over, I swear it. I've been trying to forget that one for the last few weeks. So if there's no more questions, yeah. So SPY daily. Sorry, I said I would look at SPY daily. Let me put it on a better chart so that I can give you a more. And then I'm gonna jump off for a second. Why does it keep doing that? Fine. I guess I don't need any of that stuff anymore. So let me go remove drawings. Now let me look at it on a daily. The one thing to note is, we were talking about this, Larry and I and Nate, not too long ago, was that we are coming into the 200 SMA, which will be somewhat close to the, I don't want to put a new thing on the chart. Oh no, it does have to be the SMA. Hold on. SMA. And we need to put the 200 on here. There it is. And so let's get rid of this. Remove. We're coming into the 200 simple moving average. I think we should find some resistance here. But I do think if we roll out of this level, that's my dog. If we roll out of this, if we break down that level there, I think we're moving all the way down into 411.66, and you see why I say that. I hope you can see why I say that with that massive VP node here. You can see it just sticks out, and most of that, see, it didn't even move when I did that. Most of that is all the trading that happened right here, right? So these people are going to act as quite a bit of support at this level. If we get down to there, man, those lines are just too damn big. There we go. All right, everyone. Thank you very much. I appreciate your time, and I appreciate all the enthusiasm we've had in the room this week. It's been a blast. I really hope you jump in and grab your membership before the price jumps almost double. I think I was reading in a separate thing that we have going. There's just no better place than to have a group of like-minded people talking about trades and throwing out ideas. And whether you take them all or not, you need to take the ones that fit with your trading style. And there's plenty of wrecks that get in here that I look at them and I go, nope, that doesn't fit for me. Or yeah, that fits for me pretty well. So the more ideas and the more market talk and the more breakdowns of the SPY and the Q that you can have on a day-to-day basis just keep you engaged in the market. And it's just really important. So for those of you who have joined, and for those of you who are going to join, I'm excited for obviously next week, but then, many months and years to come. So thank you guys for hanging out this week, and I will talk to everyone here shortly.